business survey overnight shows the US economy is resilient and needs only modest Fed cuts next year. China's retail sales disappoint again. New Zealand's government is expected to unveil a higher borrowing forecast today, and concerts by Coldplay in Auckland may have boosted New Zealand's inflation rate last month a bit. That's coming up in our 5 Things in 5 Minutes. And then, in the second in a series of bonus deep dive interviews to round out the year that was and look ahead to 2025, ANZ's Head of Research for Asia, Khoon Goh, says the AI chip boom is a major driver in Asia.
The biggest theme was really the stellar performance of Asian exports as the Asian economies ride the upswing in the global semiconductor cycle.
But first, in 5 and 5 with ANZ, markets are in a holding pattern this morning after business surveys in the US and Europe were supportive of ongoing rate cuts, albeit at differing speeds. ANZ economist Bansi Madhavani says last night's PMI data in the United States supported a shallow trajectory of 3 more 25 basis point cuts by the Fed next year, after, of course, a final cut for 2024 later this week. Here's Bansi.
On PMI data front in the US, the S&P Global PMI data suggested that growth, especially on services front, is quite resilient. And that resiliency in growth supports our view that Fed's 2025 easing cycle is likely to be shallow.
Number 2. European PMI survey results overnight were not quite as robust, albeit they met expectations. Here's Bansi again.
In the Euro area, composite PMI rose modestly in November, but there's a lot of divergences beneath the surface. The improvement was entirely led by improvement in the services sector, while manufacturing activity continued to remain stagnant. Manufacturing sectors, especially in Germany and France, which are the region's largest economies, continued to struggle. And that suggests that manufacturing sectors outside these two economies are faring better. So while the modest improvement in services sector is a relief, external headwinds continue and structural growth pressures persist. We assess that as growth slows and as disinflation gathers pace in 2025, the European Central Bank will need to move to a stimulatory monetary policy settings. And therefore, despite the relief on services PMI data front, we continue to see a deep easing cycle of 150 basis points in 2025.
The US dollar index was down 0.1% as of 4 a.m. Sydney-Melbourne time, with US bond yields flat and stocks being flat to 0.4% higher. The Aussie dollar was up 0.2% at 63.73 US cents, while the Kiwi was up 0.4% at 57.84 cents. Number 3. China's economic data dump for November yesterday showed another mixed picture, with strong production but weak consumption. ANZ senior China strategist Zhao Pengxing says a 3% rise in retail sales in November actually missed market forecasts for a 6% rise, partly because the singles-day sales were in October this year rather than November, and there's retail price deflation of 2%.
The big picture is that some factories would like to cut price to get more market share. I think this will continue in the next few months in China economy. Generally, the economy is far from stabilized. Short-term recovery, since the policy stimulus, I think is not sustainable.
Number 4. New Zealand's Treasury is expected to release its half-yearly economic and fiscal update later today, with a downgrade of GDP growth prospects and bigger government deficits for longer, which will increase the government's borrowing requirement by between $6 and $8 billion. Here's ANZ New Zealand senior economist Miles Workman.
If they dial back some of the rosiness in their productivity assumptions, it could mean that we end up with a downgrade to their overall economic outlook over the entire forecast horizon. And to the extent that that weighs on their outlook for the nominal economy, which is what really matters for the fiscal side of the equation, is that's likely to lead to a lower forecast tax take, perhaps a delay to the return to surplus for the OBGAL, which is their operating balance metric, and ultimately a higher debt and more bonds than signalled at the budget update.
Number 5. Also in New Zealand, there were selected price indicators for November for about 45% of the full CPI basket released yesterday. Miles says domestic accommodation and airfares were mildly higher than expected. A series of concerts in Auckland by Coldplay may have been a factor.
Stats New Zealand actually noted that there were a few international performances in the month of November. Coldplay is a good example of one of them, which played in Auckland for 3 days in the middle of November, and that does appear to be associated with slightly higher prices for both accommodation and domestic airfares.
Miles Workman there. Now, in our bonus deep dive interview, I asked ANZ's Head of Research for Asia, Khoon Goh, about the main themes he saw in Asia outside of China this year and what to look out for next year.
The biggest theme was really the stellar performance of Asian exports as the Asian economies ride the upswing in the global semiconductor cycle with really, really strong AI-related demand for chips that's really powered the Taiwanese and the South Korean economies. And we saw much stronger than expected GDP growth pretty much across the board, particularly in the first half of the year. Now, there are other economies that sort of lag behind, but there are some signs that there's a bit of a catch-up in some of the laggards towards the end of the year. So that's the one major theme. The second one is, of course, has to do with monetary policy. We finally saw the cutting interest rates, and that's opened the door for some of the other Asian central banks to embark on rate cuts as well in order to help support and boost domestic demand. And the third one is volatility in FX markets. We've seen the US dollar go on a crazy roller coaster ride, strengthening and then followed by periods of weakness. But overall, we've seen Asian currencies pretty much on track for a fourth year of depreciation against the dollar, as the US economy still is looking resilient. While the Fed has cut interest rates, US rates are still very attractive, and that continues to make it tough for Asian currencies to shine.
And how are those economies coping with those weak currencies? Because in the past, that can be a problem if you've borrowed a lot of money in US dollars and you are vulnerable to imported inflation.
There's no issue with Asian currencies depreciating this time around. The depreciation is a lot more orderly. We're not talking about massive collapse or anything like that. It's just that they've been coming under pressure because of the stronger dollar. External balance sheets are actually quite sound across the region. There hasn't been any major issues with Asian corporates with excessive leverage or foreign denominated debt that they can't service. And even on the inflation front, despite weaker currencies typically imported inflation, but this time around inflation across the region actually have been falling, which is why that's created room for some of the central banks to cut rates. Now, the lower commodity prices, particularly for oil this year, has of course helped in that inflation picture.
And looking ahead to 2025, what are the themes that stand out for you?
Well, 2025 is all going to be about Trump, the return of Trump 2.0, and what kind of policies he will unleash is going to be pretty much the main driving factor. So on paper, our forecast for 2025 is for a continuation of modest growth. Ex-China and India, we're looking at growth slowing slightly from 3.8% in 2024 to 3.5% in 2025. But there's a lot of uncertainty and downside risks because Trump has already threatened additional 10% tariffs against Chinese goods. He's been silent about whether or not he's going to impose any tariffs or trade restrictions against the other Asian economies. But if he does, then that's going to cause more volatility in financial markets. We'll probably see currencies continuing to adjust to absorb the tariff impact, and that will have major ramifications for the region's exports and supply chain shifts.
The last time Trump was in, a lot of Chinese-based supply chains managed to friendshore or nearshore, which actually benefited a bunch of economies in Asia outside China, including Vietnam and Malaysia. How do you think the whole issue of friendshoring and nearshoring might develop, and what are the things to watch there?
There's no doubt Vietnam had been one of the major beneficiaries of the whole China plus one diversification strategy. India has also been a huge beneficiary of that. Other countries like Malaysia as well. And they can continue to benefit if Trump imposes those additional tariffs against China, provided he doesn't impose restrictions on the other economies as well.
Khoon Goh there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, December the 17th. We'll be putting out our last episode for the year tomorrow. We start again on January the 13th. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.